This income ETF is so good that it actually won an award for the returns. Welcome back to the channel, guys. Today we are discussing ticker QQQI, the very popular monthly paying dividend ETF by NEOS. If you don't know, I'm a massive fan of the NEOS ETFs. I think they have been well outperforming a lot of other ETFs in the same sector, and thus I might be a little bit biased. I'll say that right now. I do own QQQI and SPYI, and they are some of my favorite positions currently. So today we're going to do a breakdown of how well QQQI has performed in the beginning of 2025. A full $10,000 invested, how much money would you have made? How has the return been in this crazy market we are seeing? We're going to look at the website, the distribution history, the drip calculator, and then run our calculations. So I hope you guys enjoy. If you are interested in high yield ETFs, in growth ETFs, in making money in the stock market, you are in the right place. Join a group of active ETF and stock investors and hit that subscribe button. Thank you so much. Time to roll that intro. The price return for QQQI hasn't been amazing. So far, year to date, it's down 2.2%, which could be worse. We have seen quite a crazy market. On the 1 year, it's down 0.2%, 27%, and 5 year is too old. It only started trading February 2 of 2024. So it's been over a year, which is great, but not a ton of growth from this ETF, about 2% since inception. Now, of course, this is not a growth ETF. This is an income-based ETF. And if you haven't noticed, I haven't talked a lot about income ETFs on this channel. But what I'm doing now is, as my main channel, Spencer Invests, is getting overrun by all the new weekly dividends and the monthly dividend ETFs that are coming out, I'm moving some of my slower moving but very reliable content over here, like the NEOS ETFs and a few others that you'll see shortly. So I hope you guys do enjoy that. Now again, so QQQI is based on income. It's supposed to pay the bills every single month, which we love to see. And one of the things I absolutely adore about this ETF is it has little to no NAV erosion. Even in the down market, it performed relatively well, only falling from $54 to $43 and then bounced right back up to above the 50s again, which we love to see. So now we're going to look at their website and let's see what award this ETF won. There's a lot to talk about with QQQI, but we can see it won Best New Active ETF by ETF.com. The expense ratio is a little bit higher at 0.68%, although it's not the worst that I've seen. The distribution rate is a remarkable 15.35%, which is wild. Also, I love to see the expense ratio not being too high, but the net assets at about $1.9 billion. This is a larger ETF compared to some of the ones I talk about on the other channel. So the target of this ETF, it wants to distribute high monthly income generated from investing in the constituents of the NASDAQ 100 index and implementing a data-driven call option strategy. I'm a big fan of the NASDAQ 100, very tech heavy. It's just my interest. And so I like to track the NASDAQ. I think it's performed extremely well over the last couple of years as well. We can also see actively managed by NEOS. That's why the fund is a little bit higher. The fund seeks to take advantage of tax loss harvesting opportunities in addition to utilizing NDX index options classified as Section 1256 contracts, which are subject to lower 60/40 tax rates. All in all, what this means is that if you're investing like I do in a Roth IRA, and let's say you already maxed out for the year and you don't want to put more money in there, but you want to invest more, what you should do is find what is the best taxed ETF, or I should say the most optimized tax ETF, and move that out of the tax exempt account and move everything in that is going to be higher tax, like what we've seen with some of the yield max ETFs. And that's what they're doing with NEOS, these funds. They're just better with taxes. You pay less in taxes on the distributions, which is amazing. Not financial advice, of course, just what I am doing. It's my strategy. And we can see the third thing about QQQI that has this thing so popular is it utilizes a call option strategy that may include both sold and purchased NDX index options, which may provide the opportunity for upside capture in rising equity markets, which we like to see. We usually see the markets go up, including the NASDAQ, like I said, with its really good performance. I love to see that because I don't like simply getting distributions. Yes, a 15% is a phenomenal distribution rate, but I do like a little bit of upward momentum in the long run. So there is a ton more information. If you guys are interested, check out the NEOS website. They do have YouTube as well. I'm going to go ahead and jump into the dividend history on Seeking Alpha. The reason I like Seeking Alpha is because they have this chart that showcases the distributions. We can see since inception, it's been paying 59 to 64 cents at the low of 53, it looks like, which is very solid. Now, remember, if you are a traditional dividend stock investor, you might be worried about why the dividends aren't slowly increasing over time. And while that is something that you would see from a basic stock like Johnson & Johnson, Coca-Cola, when it comes to these income ETFs, the option premiums, or how they make the premium by writing the options, is variable. It all depends on the implied volatility as well as the movement of the market. And so it's not going to be consistent, but what I don't like to see is when funds consistently lower their distributions. And we are not seeing that at all with QQQI, which again is one reason why this thing is so popular. Now, sliding down, we can see it has paid out roughly 60 cents on average. And if we jump over to the dividend scorecard, it's going to show us a 14.3% distribution rate and an annual payout of $7.32, which is great. So that's annual per share, and it costs $51.22 per share. Pretty solid trade out when you look at the growth and safety of these dividends. One thing I absolutely love to run all my ETFs through is the drip calculator on dividendchannel.com. When we pull this up, we'll zoom in. We can see the return with dividends reinvested and not reinvested. We can see it's been trading for 1.4 years. And if you had invested 10K at the inception of the fund, which is late January of 2024, your $10,000 would now be worth $12,441. Again, most of that coming from the distributions because the price has only gone up 2%. That is a total return of 24.42% and an average annual total return of 17.5%. Now, I don't know if you guys are familiar with how the stock market trades, but typically you get an 8 to 12%. That is the average. And what that means is QQQI outperformed the average market return. Now, we did see a pretty solid market over the last couple of years. So although we had some indices outperform QQQI, I am very happy with this. And if they were able to keep this strategy going and keep these distributions and their volume up while the market was trading sideways, while it was in a slight downtrend or a very slow uptrend, that would be absolutely amazing. And that's a big focus of these income ETFs. With dividends not reinvested, it's still pretty solid. The disparity is interesting though, because the longer you go in the market, the more the drip makes a difference, especially depending on the chart. And so when we're looking at this, we can see total dividends remain the same, but our total percent goes from 24 all the way down to 22 in just in under a year and a half's time. And our total amount made is not that different, $100, $150. But if you stretch that out over a 20 or even a 30-year period, it would make a massive difference in your total returns. So now we're going to jump into that calculation and see what we would make if we invested $10,000 at the beginning of 2025. All the data is plugged in. We're getting paid monthly. Drip is on. We have 195.24 shares. Our share price is the same. We're not adding anything annually. So we're just starting out with our 10K. And we are not going to get taxed on the dividends because I invest primarily in a Roth IRA. If you are going to get taxed, factor that number in individually. It's different per person depending on your income and the tax vessel and all that good stuff. We can also see dividend yield is 14.33%. When I ran this number, this is from marketbeat.com. When I ran the calculations myself by adding up the year-to-date dividends paid out, it was ever so slightly lower, but we're also not going to factor in any growth or drop in the price because that has been kind of negligible. You know, we haven't seen a lot of return from price change, so I'm just not going to include it because it is harder to predict as well. We just hope that this thing continues. So when I run the first calculation, we have 1 year invested. Our 10K is going to pay us $1,433 over that time span, making our ending balance $11,433. This is phenomenal. It's a 14.33% return, which is what we would expect. We kick this up to 5 years, and your 10K is now worth $19,534, which is phenomenal. We've now been paid out $9,500 total. And our annual dividend income, the difference is between what's been paid out and our annual dividend income is this is the annual dividend income moving forward because we are dripping. So we're now making $2,800 a year off the dividends. Again, from just a $10,000 investment, making $2,800 a year. Pretty insane. It is pretty insane. Now it's lower growth, but this is consistent and we've seen it perform this well so far. Will it continue? We hope so. I definitely hope so because again, I am invested in QQQI. Jumping it all the way up to 10 years, we are now going to see it nearly double, all the way to $38,000. Crazy. We 4x'd our money in 10 years. That is very, very solid. We've made $28,000 from just the distributions, and our annual dividend income is now $5,500. I love running these calculations to see what your money can actually make you. Now, we can't live off of $5,000 by any means, but who knows? The more we make, the more this would be a nice lump sum to get every single year. After 20 years, you now have $145,617. Our total dividend payments over that 20-year period, $135,000, and our annual dividend income is now picking up. It's now almost $21,000. Again, you would not be able to retire on $21,000, but that could be a huge chunk of a car payment. I hope your car payment's not $20,000 a year. It could be a massive jump on a mortgage. That could definitely help you live for a long time. And that's what I love. I love doing that. I love using our distributions to not only reinvest, but eventually to live off of. So I'm going to do, let's see. I always say, let's say you are 25 and you want to retire at 55, even though you can't pull from your Roth until you're 59 and a half. Let's say you're going to retire at 55 and you're going to want to live off of these dividends. Can you do it? How much? Maybe you have other things you've invested in that are making you money. You just want some extra supplemental income. Is it going to be enough? Is this ETF worth it? Well, after 30 years with a dividend yield consistently of 14.33%, your $10,000 would transform into $555,666. We've made almost $550,000 on dividends over this 30-year period. The beautiful thing about this is, although with inflation and whatnot, the dollar will be worth less in 30 years than it is now, you are still making $79,600 off of QQQI. That is outstanding. I absolutely love this ETF and the power that comes with it. Now, I know you probably wouldn't be comfortable living off that much in retirement that many years down the line, but let's say you waited another 5 years until you were 60. Let's say you've invested $10K for 35 years. And again, $10K is the only amount of money you're actually paying into this. If you were to add more and more money every year, you could significantly outperform this, but this is just one spur of the moment crazy investment. After 35 years, your money is now worth, we're loading, $1 million. Just 5 more years got you up over $1 million, $1,085,000. Total, we've made $1,075,000 in dividends, and our annual dividend income is now $155,500, which annually I bet we'll be able to pay for our retirement homes when we are in our 60s, although I hope we don't have to go to a retirement home when we're in our 60s, but still, that is phenomenal. If inflation's really high, maybe not, but again, this is off of just a $10,000 investment, which I can't even believe. Now, I hope you guys enjoyed this video. If you did, don't forget to like and subscribe. We've been working on growing this channel, and I really, really appreciate it. Also, if you liked this video, chances are you're going to find these very entertaining, including this one on SCHD, the retirement ETF. Check those out. Let me know what you think, and thank you guys so much for watching.